Matthew, there is one thing that HSBC is not cutting back on, and that is slide decks. We have been snowed under with slides of new plans from the bank, and the stock has responded to all this profusion by doing nothing. Did we learn nothing from this PowerPoint extravaganza?
We learned that HSBC's got quite an interesting palette of colours that it uses on its slides. We learned that it favours lists of 10 things.
Yes.
There were sort of 10 measures that it was going to take. But were any of those 10 really new? Well, let's go through them. In terms of cutting back on risk-weighted assets, well, we knew that was going to happen. In terms of cutting jobs, well, we knew that was definitely
We do get a bit of precision on those two.
We get a little bit more detail.
A little bit more, but we knew the general area, and they kind of put hard numbers on those.
Yeah, that's right. And we knew that the cost cutting was coming. One thing we did learn with that, I think, is that cost cutting might not be as great or as drastic or as immediately effective as we thought.
Well, it's sort of the difference between net and gross, right? There was a lot of big gross cuts and small or non-existent net improvements. So all of this expense is going to come out, hooray, hooray.
Yep.
We're going to put those dollars to work somewhere else, and we're going to sort of end where we started.
Yeah.
I mean, was that?
I think so. I think that's one of the big questions that's come out of the slides and subsequently, which is we're taking certain things away, but then we're going to put them back in. They talked about cutting risk-weighted assets. They talked about redeploying them.
Yeah. So we have $1 trillion on an adjusted basis of risk-weighted assets.
Yep.
$300 billion US comes out, and gets in a little boat and goes straight to Asia, where it's going to be put to work somewhere else. It strikes me this is risky.
It is risky.
Yeah,
because the assumption is that it can be put to work better, that growth can be achieved. These are not areas where it's going to be easy to do that. In parts of China, HSBC can't just go in and suddenly generate growth overnight and hit its targets in 2 years' time necessarily.
Yeah, I agree, and I think we are at a point in the history of banking where what investors want to see is banks that are just smaller.
Yes.
And that is not what we're going to get from HSBC. We may get a better bank. They're losing fat. They think they're going to add muscle. It may work, but all the same, what the world wants to see is smaller, tighter banks. So let me close on this question. How long does the chief executive, Mr. Gulliver, have to produce some results before he gets the Anshu Jain treatment?
Well, very good question. You've got to bear in mind that this is, in fact, the second massive restructuring that Mr. Gulliver has announced inside 4 years.
Yes.
You've got to look at the targets that he's set. Return on equity of 10%. So talking to an investor earlier who was saying that's priced for perfect execution. HSBC does not have a history of perfect execution.
Stock trades above book.
Yep.
They're only going for a 10% return on equity.
Yes. Target's 2017, so I think your answer is 2 years.
Thanks very much.